Hey, my name is Kristjan Raude. I have been a marketing mentor for startups since 2015, and since 2018 I have been an active angel investor. In my portfolio there is close to 30 investments, and I have been also a lead investor to 4 rounds. And today I would like to share my experiences in a topic of what do angel investors really want. So let's look closer. Why do angel investors invest? So typically, angel investors invest during pre-seed and seeds phase, meaning that there is a very high risk of failure of the startup, which is okay. But at the same time, if the startup will be successful, there is a huge upside in terms of a potential return on investment. The expectation amongst the angels are normally and typically 10x in 5 to 10 years period. But I also know some angels who tend to wait 100x or even 1000x as outliers in their portfolio. Another reason why angels invest is just to diversify their own investment portfolio, meaning that a rule of thumb is 5 to 10, maybe max 20% of the whole net asset value will go into startups. And of course, as an angel, if you have been a good entrepreneur, successful entrepreneur, maybe made some exits as well, there is a strong reason for some of us is to invest because giving back to the community. Not only the financials, the money, but also the experience, the network, and the access maybe to the hidden doors. So here is the thing, how angel investors choose their investments. Mostly angel investors, because they are tending to invest during pre-seed or seed stage, meaning that they're mostly investing location or region based. For example, I'm located in Tallinn, Estonia, and mostly I'm investing in this region. I mean, Estonia, Latvia, Lithuania, maybe Finland as well. Industry and type is also one way how angels are looking their investment thesis and portfolio building. Is it fintech, marktech, health tech, SaaS, deep tech, green tech, artificial intelligence, mobility, B2C, B2B, marketplaces, you just name it. And normally these industries and types of the businesses are very much related to the previous experience as their experience as an employee or as an entrepreneur in a certain field. Another way how angels tend to look to build up their portfolio is phase-based investing. So are they very early investors that they would like to join during the friends, fools and family round, FFF round? Do they mostly invest during pre-seed, seed round, or maybe some super angels also investing during A round and maybe even A+ round? And of course, angels, they invest their own money, and typically this money is limited, meaning that if they build a portfolio, they know that where they want to reach. If they have a free spot on the portfolio, they tend to invest. But you can also meet angels who are very active or who have been very active, and they just say no to you, not because that you're doing wrong business or you have a bad team, but because they have just invested all of the money into the startups and now they are just looking to have their portfolio matured and exited. And one important thing to consider as well, and remind yourself, angel investors are not looking for dividend companies who are paying their dividends in the future. They are expecting very successful exits. So they take in high risks, but they also would like to have in return high returns. Now let's go to the very hot topic. What's my company valuation? And how much money I should ask from the investors. Let's make one thing clear. Your company valuation doesn't equal the real value of your company. Most of the times the real value is close to zero, but valuation number is just agreement between the investors and the founder to agree on the certain valuation that the company can run in a long way. There is 2 popular ways how to calculate your company valuation. First, it's called reverse engineering. What does that mean is that you need to calculate your money needed for the next 12 to 24 months, and based on that you are okay to give away 10 to 20% of your company. The second one is comparables. So you or investors are looking into the market and see, are there any comparable deals which have been done in a market similar to your company, and what was the deal terms, the valuation, etc. Regarding the instruments, what will be signed when making investments, there are also different opportunities. In the early stages, some investors and founders tend to use convertible notes and or safes, which mean a simple agreement for future equity. But most of the times it will be equity, straight to the equity.